But let's get underway. So I'm gonna share my screen over here. Mm-mm-mm. Okay. This is gonna be a forex training. Are we okay with that? Are we good? Is that okay? I feel like forex is like the fundamentals, and I feel like that. When I started, by the way, just to give you a little bit of a story from when I started and I was investing for the first time. I started in the forex market because we didn't have anything else. I didn't really have the luxury of being like, oh, let me dive into crypto. Let me have my services automated. Let me get into NFTs. These are things that I didn't really have access to. Every single week we're having different things, and tomorrow we have the NFT bootcamp. So that's gonna be exciting, and y'all can actually learn from there. We're gonna have a couple special guests that are gonna be talking about that. Not just from our team. We're actually gonna have someone in GC who is an NFT expert, and he's gonna be coming in and actually dropping some value. So that's gonna be cool. So make sure you plug your guests into that. If you haven't seen the flyer's there, and I think the link was dropped. If not, I hope the link is there. But yeah, you guys can send that out. So we're gonna go through some of the alerts over here on alerts one. I'm gonna pick some of these channels that we can go through, and I'm actually gonna draw out how to enter these alerts properly to see the most success. Okay. Any channels that y'all want me to go through specifically for forex? Anything that y'all are really, or any alerts that maybe you took even today? Yeah, let's share the screen. Awesome. Okay. So y'all let me know in the chat. I can't really see the chat right now, but I'm gonna try. Okay, I'm gonna try. Let's see what y'all are saying. Yes. So what alert channels? You guys have any suggestions? If not, I'm just gonna pick, and we're gonna go into this. Okay. So let's do this vertically. Okay. Nice. All right. So this is gonna be, like I said, a very good intro and breakdown of what you should do when you're taking alerts. I really like this just because when I was starting to trade, one thing that I did was I just kind of went into things blindly, and yes, I did make money, but they always say that good results reinforce bad behavior if the bad behavior gets you the good results. So if I'm doing the wrong things and I'm making money, I'm gonna be like, oh, I can keep doing this, and I'm gonna keep making money. But in reality, that's not actually the case because you're probably trading wrong. How many of you experienced like a big loss trading before? Drop a seven in the chat. Just Megan. I would drop a seven too because I've experienced big losses, like very big losses before. And my whole the reason why I bring that up is just because, actually, wait, can you guys see me? Are we still good? It says that I was logged out. Are we good? Yeah, I don't know why it says that. Anyways, I don't need to see myself. So one of the biggest reasons why I experienced those losses was because I either got too greedy or I got really emotional. And that was a problem because one, I was getting good results, so I just wanted more money, right? And by wanting more money, I would chase after the profits. And when you chase the profits, that's really not a good thing. It's gonna end up really badly for you. You should never, in investing, you should never be chasing profits. You should always just be hitting targets, and setting them over time because investment should be long term. If you're day trading, that's a whole different story. But I'm not here to get you rich quick. I'm here to like help you build wealth over time, and that's what I really believe investing is all about. And even the greats like Warren Buffett will say that. So that's number one. Number two, with being emotional, is when you experience losses, many people just quit. We see this in entrepreneurship, but we also see it in trading and investment because they experience those losses, and that's why you hear the story of your grandmas, friends, neighbors, cousins, little sisters, brothers, older cousin, like what this person lost a ton of money, and you hear these stories and it passes down because they had a bad experience and they end up quitting on themselves, which is probably not a good idea because had they stuck forward, they would have been doing a lot better. So, to give you an example, when I was trading, I had a huge loss. So let me just write down forex so you guys can actually see something. Can you see the screen still? Is that good? Yep. Okay. So when I was trading, I made around $10,000 in my first 3 months from $1,000. and I kept this a secret because I was like, this has to be illegal. Like, what am I doing? Like, how did I just do this crazy profit? And I was 20 years old, so I'm just like freaking out. Then I keep trading in my MetaTrader 4, and I see losses, right? And I'm like, okay, well, it's whatever. You deal with losses. I start with 1,000. But then one day I had a $3,000 loss um, from that account, and I was thinking to myself, okay, well, I'm just gonna stop trading for a couple of weeks because, clearly it's the alert's fault, not my fault. So I had that thinking, and because of that, I ended up missing on the best trading week we had that year. Right? That was like a record that we had until then. That was the best week that iGenius had trading, the most pips that we've ever caught. So I missed out on the biggest week in trading history that we had to that point because I got emotional. So those are two things I want to say right off the bat is if you can't figure that out, you're not going to see success within any kind of investment. So don't get greedy and don't get emotional. Okay? Those are two really important things. So let's just make sure that's clear. Now what I want to do is actually move on to some of the alerts. So in Forex, there's a few things you have to break down. So if I go to, let's say, FX Pro Theta, because that's the most recent one that I've seen, we got a few wins today. So let's go to that. So today they sent out an alert, and this was the setup, okay? If you're on the alerts one channel, you can go to FX Pro Theta and actually see this yourself. I'm just gonna rewrite the alert so we can all follow along. I really like the setup of this alert, by the way. So here we have. Who wants to tell me what these two currencies are that we have here? What currencies do we have here? Let me know in the chat. Let's see if we've been studying the Forex market. How many people are on the call? We got 33. Okay, Canada. Yeah, we got the Canadian dollar. That was a little bit slow. We got the Swiss. Yeah, the Swiss franc. So in Forex we always deal with two different things, two entities, right? So one is the Canadian dollar. The second CHF is the only one that doesn't really make sense right away, because CHF is not like Switzerland. Um, so it's just CHF Swiss franc. Just remember that. There's some that are a little bit weird like that. But in Forex, you're always dealing with two different things. And because you're dealing with two different things, you're dealing with a ratio, right? And this ratio is called the exchange rate. So the exchange rate is something that moves over time based on the economy, based on GDP, inflation rate, unemployment, all these things that contribute to the economy. And this will cause a currency to go up or down. If that makes sense to you, just anything in the news, politics, whatever, this will affect the currency of every country. Now, when you're dealing with two countries, now it's a little bit different because now you're dealing with a ratio of how one country's currency is doing against the other country's currency. Because you have this, you know that it can be very volatile, right? We know it can be very volatile. So, right now, what this means is that when this alert was sent out at 11:58 a.m. Eastern Time, EST, the market was trading at, the Canadian dollar was worth 0.747 of the Swiss franc. So, in other words, this means that 1 Canadian dollar in that moment equaled 0.747 Swiss. I think it's francs like this. I could be wrong, but anyways, that's what it means. So, which one is worth more? Which currency is worth more in this case? Jackie, the channel is FX Pro Theta. Theta. Oh, no wonder this alert setup is so good. Theta is probably my favorite channel, to be honest. Probably my favorite channel. You'll understand why after this training. But which currency is worth more in this case? CHF, CAD. Okay, we got a split. Who wants to break the split? Let's keep going. Keep guessing. Even if you're wrong, it's okay. We learn from our mistakes. CAD, CAD, CAD. Yeah, the Canadian dollar is worth more because one. Oh wait, hold up. Y'all threw me off. The currency that is worth more. Who said CHF? Who was that? I think one person said it. Hold on. Marianne. Or it's Mirel, right? If one Canadian dollar gives you less of a currency, then the currency that there is less of is the one that is worth more. So, in this case, the stronger currency is the Swiss franc. Ooh. You guys understand why, right? How much does a Canadian dollar give you in USD? It gives you 0. Y'all understanding now? How much does one? Let's use the US dollar. It's an easy example. 1 USD equals how much Canadian? Like $1.30, right? $1.30 Canadian. If I reverse it and I say 1 Canadian dollar, how much would that give you? It'd give you around 0.7 USD. So which currency is worth more? It's the one that is less. You get it? You get it? So in this case, the Swiss franc is the higher currency. It's worth more. Just to point that out, just so you understand, okay? Now, now that you know that, and you know the entry point, you have some targets, okay? And you have a stop loss. Can someone briefly describe what the take profit is in the chat? What is a take profit? And then while you're at it, someone explain what is a stop loss in your own words. So Megan says when you pull out your profits, yeah, so the take profit is like a target. Once you hit that target, MetaTrader will automatically pull you out with your profit, right? The stop loss, on the other hand, is if you hit a lower bound target, which is kind of like a threshold, it's going to pull you out so that you don't have more losses. Yeah, how much you're willing to lose. So it's going to pull you out and protect you. Stop loss is a protective target. So once you hit that, you don't lose your whole account. Because I'm going to draw this out for you so you understand, okay? So in this case, we have the currency. Oh, by the way, this was a buy. Just so you know, this was a buy trade. So if I know that the market is going like this, up and down, up and down, up and down, kind of like some of y'all's heartbeat, you know, at a certain point, if we want to buy, we're going to want this action. Right? We're going to want this action. You want to go to the moon. So on the way to the moon, there's certain profit targets that you want to reach. There's take profit number 1, take profit number 2, and take profit number 3. Okay? So the higher the take profit, the more money you can make. Does that make sense? There's a lot of you that are not participating, so I'm assuming it's because you're taking notes. But everyone take a second right now. Did that make sense? The higher the take profit, the more money that you will make. Drop a 1 if that makes sense. Okay? This is really important because you have to understand this. The higher the take profit, the more money you can make, but also the higher the risk. Why is that the case? Take profit 1 has the highest chance of being achieved. Why? Because it's the lowest point up the ladder. It's the lowest point up the ladder. Take profit 2 is in the middle. And take profit 3 is really, really, really high. So there's no guarantee that it's going to hit any of those, but if it is, it's going to hit take profit 1 first. So if this trade wins, you're guaranteed to hit take profit 1. Does that make sense? If this trade wins, you're guaranteed to hit take profit 1 at the minimum. But it's not guaranteed that you're going to hit take profit 3. So this can happen. Some traders, they'll set a take profit 3, right? Then, okay, we're going up the ride, take profit 1, we hit it. Amazing. Hit our take profit 1. Congrats, fire emojis in the channel. All right, cool. Next. We go to take profit 2. Take profit 2. We hit take profit 2. Congratulations, everyone that had take profit 2. The trade automatically closes you out. But sometimes in the market, we experience this. All of a sudden, on its way to take profit 3, it goes all the way down, and it hits our stop loss, and you lose the trade. So even though everyone won the trade, you have lost because you entered take profit 3, and it didn't hit it. So you get what I'm saying? So some people are like, oh my gosh, the alerts aren't winning. No, my friend, it's not that the alerts are not winning, it's that you probably set your bar way too high every single time. And so while everyone's winning, you're on the floor crying because you lost. So, just helping you understand, take profit 3 is not a bad thing, so don't think it's a bad thing. But if you want to set a higher take profit, you got to be willing to spend more time watching your phone or watching the chart. If you're someone who wants to do this very low, like you want to only take a couple minutes out of your day to enter these alerts, then you're going to want to have take profit 1. This is called semi-automated trading. So automated trading, we have like Crypto Elite, and we have Coin Rule and all that stuff, right? So this is a semi-automated form of that. So here's the takeaways from that, because I know it's probably a lot to write down. The higher the take profit, the higher the risk. The lower the take profit, the lower the risk. Okay? That's it. Write that down. The higher the take profit, the higher the risk. The lower the take profit, the lower the risk. Okay? And also, the higher the take profit, the more time you're going to have to spend. More time monitoring. And the lower the take profit, the less time monitoring. Also, the higher the take profit, the more money you're going to make. The lower the take profit, the less money you're going to make, but you're still making money. Is that a simple way to frame it? Does that make sense to everyone? Is that good? I feel like if you write that down and you keep that close to you, you're going to really understand one of the key principles in trading, which is risk management. Because it is not just about entering alerts, it's also about understanding the risk that you're getting yourself into every time that you invest. Because every time you invest, you do not want to look at it as I'm guaranteed to make money. You want to look at it as what is the potential downside. And with this, you have a better understanding of what that looks like. Okay? So, now that we have that and we understood take profit and stop loss. It's very quiet. Why is the chat so quiet? Why is it so quiet? What's up? How many? 32. I'm letting the 32nd person in. Is Megan the only one on the call? Where's the Dutch team? I see the Dutch people rolling in. Are we doing good? Am I speaking too fast? Let me know. I'm trying to keep this. All right, perfect. My Dutchie's in here with the flags. Awesome. Taking notes. Good. I understand. I'm not someone who talks in the chat a lot when I'm on calls because I'm always taking notes, but sometimes with interactions like this, I just want to make sure that you understand and I want to make sure that you ask the questions that you need to ask. Awesome. Okay. Good. Okay. So, not me scrolling on I'm scrolling on the mouse thinking that's going to move the iPad up. Whoops. Okay. So, now that we went over the currency, the alert, how it looks like, the market moving, how that looks like on a chart, and understanding the associated take profits and the risks. Okay? Now, what we're going to do is we're actually going to break down how you would enter this and how you can calculate your potential wins and losses. I was doing a training once on this before, and one of the hardest things for people to understand was how do I know what I'm getting myself into because all I see are decimals. I'm not good with numbers, I'm not good at math, so I'm looking at these alerts and it doesn't make sense to me because I want to know how much I can win and lose. Like, is that hard? And some people, some channels don't put that. And there's a way to actually know that just from looking at it. So the first thing that we got to learn about before we even do that math is pips. Some people say this in different ways. I think the easiest way to say it, for me at least, is points in percentage. Okay. In school, we always learn about, units of measurement. Units of measurement. For my Dutch people, I don't know if you're familiar with this because I know it's probably there's a Dutch way to say this, or for my Arabs in here, there's probably an Arab way to say it or whatever. But kilometers, meters, milliliters, liters. What else is there? Centimeters, right? Gallons. All these units of measurement that we learn, in school. Pips is a unit of measurement in Forex. But unlike all of these don't make you money in the market, but pips do. Okay? So that's what it is, to explain it simply. So if I want to calculate pips, the way I calculate them is going to be a little bit different. These numbers mean different things. So there's three ways to look at this. There's most cases, there's two exceptions. In most cases, the pip is the fourth decimal place. Fourth decimal place. Okay? But there's two exceptions to that. Okay? I'll put this up in case you wanted to copy this for a little bit. So there's a lot of decimals in Forex. We know that. When you look at alerts, you see a bunch of numbers. These numbers are easy to read once you understand what they are. And what you're actually calculating for and how you calculate how much money you make is by knowing how many pips you're making. Okay, so if me and Megan have a conversation and I'm like, Megan, we should work together right now and our target every single day in the Forex market should be 30 pips. If she has a $10,000 account and I have a $1,000 account, pips are what keep it consistent. So it doesn't matter how much money you have in your account, pips are the same regardless. But what those pips mean in dollars is going to change based on how big your account is. So if Johan, let's say, has $200 in his account and Mo has $10,000 in his account, they're going to make a very different amount of money, but even if they catch the same amount of pips. Okay? So just making that clear. And these are decimals. So if you're looking for pips, like I said, in most cases it's the fourth decimal place. In the Japanese yen, which is JPY, right, it's going to be the second decimal place. So if you ever see JPY in a currency pair, the pip is the second decimal place. And last but not least, XAU, which a lot of you love. This is gold. A lot of you are gold diggers. Y'all love trading gold. XAU. And that in that case, it's the first decimal place. Some of y'all really like that, so it's the first decimal place, okay? Victoria's laughing. Gold diggers. So, some people weren't paying attention to the call, now they're paying attention to the call. So these are the three different things, okay, to look at. So yeah, it's a really good point. I'm glad you asked that question. You shouldn't trade gold unless you have a bigger account size, right? 100%. I would recommend if you want to trade gold, you should have a minimum of $1,000 in your account. $1,000 US, not 1,000 in whatever currency you have. 1,000 US dollars. If you have less than that, I would really stay away from gold because gold will really, 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 really hurt for the losses. $100 losses are very easy with gold. So I'm just saying, if you have a $200 account, a $500 account, don't do that. $1,000 plus. So let's move on to our example. So now that we know those three things, if I look at CAD CHF, which category does that fall under? Which category does that fall under? So in this case, what is the pip? If you know the answer already, like if you're someone who's seen this training before, don't answer, please. I want the newer people to answer. So based off the three things that I gave you, in this case, which number is the pip? Is it the fourth decimal place? Is it the second decimal place? Or the first decimal place? And by the way, the decimal places, to make it easy for you, I'll put like 1, 2, 3, 4. There. Fourth, Mirel, Justin, Devi, right? I'm gonna say it properly. Devi, Allison, fourth. For my people that said the second, it's okay. But the second only applies to Japanese yen. Is there Japanese yen in this example? No, there is not. So this will teach you to train your eyes to look for this, right? If you don't see gold or you don't see Japanese yen, then you know it's the most category. And in most cases, like I said, it's the fourth decimal place. So in this case, the number is 0. 0. The pip in this case is the 0. So because we know that, let me ask you a question. If this number goes from 0.7470 to 0.7475, how many pips did it change? 5, right? If it goes from 0.740 to 0.7490, how many pips did it change? 20. 20. Which, funny enough, is our first take profit. So thanks, guys. You just answered the first question. How many pips am I making if I hit take profit 1? 20. 20 pips. Okay, so now that we know that, in that case, how many pips is the entry price? This is the entry price, by the way. Entry price. How many pips is the entry price to take profit 2? Some of y'all good at math. 50 pips. And by the way, if you're not good at math, trust me, you will get good at this because it's going to make you money. And when money's on the line, trust me, you get good at everything. So that's take profit 2. Number 3, take profit 3 is, how many pips is that? We're looking at a bigger number here. 0.740 to 0.7570, right? What is that? 100 pips. Now, how many pips can we lose? How many pips can we lose? 0.7470 versus 0.7420. We can potentially lose 50 pips. That is how much we can lose. Okay, this is really important. For anyone, is anyone confused on this? It's okay if you're confused, by the way. Some of you that are answering and get these numbers right away, either you've seen this before or you're really good and you understand it quick. I had to go through a training like this 10 times. And I got like a 98% in my university math calculus class. And I had to look at this 10 times. Because being good at math doesn't really like it's not everything. They're always good at math, trust me. So if this doesn't make sense to you, right, it actually looks like it actually really reminds me of school, and it really looks like crazy stuff. Imagine y'all are practicing this, and you go to Starbucks, and someone walks by you, and they're looking at all these numbers on your paper. They're gonna be like, "What? What is this person doing? This must be school." Nope, I'm making money. Oh, okay, okay. So when you have things set up like this, you start to realize, okay, well, my entry price is that number, so now I'm breaking it down. Going from that number to that number is 20 pips. Going from entry price to take profit 2 is 50. I know that take profit 3 is 100, and if I lose, it's going to be 50. So a lot of people might say, oh, if I'm going to lose 50 pips, I should probably set take profit 2. I mean, that's not always the case, because yes, that is probably a good risk to reward because it's 1-to-1. But since our alerts do very well generally, you can get away with doing take profit 1 and just getting your small profits and collecting those. Especially if you're someone who doesn't want to really pay attention to your phone at all. Like, you have work, you work a 9 to 5, you're really busy schedule, you're a business owner, or you're building this business full time, you don't want to look at your phone, kind of like me. I'm just going to enter take profit 1 most of the time because I can't be bothered to look at my phone for trading as much as I used to. So I'm someone who will enter take profit 1 and leverage automation because I don't want to be behind the chart all day or looking at my phone all day wondering if I close my trade or not. And y'all know the feeling when you wake up and then you see that you forgot to close the trade and you entered no take profit. Some people don't enter a take profit because they want to go for the moon and then they forget, and then they wake up and their account's gone, obliterated. Yeah, some people deal with that. Please don't be one of those people. Victoria's crying inside. So as we move on, and we have these numbers collected, now we can move on to the next step, which is what does this mean in dollars? Here's some very this is math, but you don't really actually got to know the math because you can memorize these numbers. Who knows, you know when you go on MetaTrader 4 and you go to the top of the trade when you're entering a trade and there's like a small decimal number. Anyone know that number? You know what I'm talking about. Let me go on MetaTrader 4 quickly. And if I'm going to trade, let's try entering a trade. Let's actually make this in. Which one is this? CAD CHF. Let's do that. I'm going to show you an example with a dummy account. Where is this? Trade. Okay. So, you see. Oh, actually, you guys probably won't see that. Hold on. Let me stop the share for a second. Y'all see this? You know how it's CAD CHF market execution 0.01. You see that? And I can change that number to, let's say, like 0.5. 0.5. See that? Hold up. See that? 0.5. You see that number? So that number is what we call. Now let me go back to the screen. Let me share this again. That number is what we call your allocation. Or some people call it lot size. This number represents what your account is, okay? So it will not set automatically. Let me just help you understand that. It will not set automatically. If you have $1,000, it's not going to allocate to $1,000. What's going to happen is you have to change it yourself. Now, if we, let's say, give me three examples of account sizes. $3 amounts. Give me $3 amounts right now as an account size. $100, $500, $1,000. Okay, these are good. Good numbers. 100 divided by 10,000 is 0.01. Okay? That's example number 1. 500 divided by 10,000 is 0.05. 1,000 divided by 10,000 is 0.1. Why are these numbers important? Because this represents what you should place for your account. Okay? If I have a $100 account, I want to be trading at 0.01. But because that's such a small account, you probably only want to be trading maybe once a day. Max twice. Okay? And you would enter 0.01 on that top of the MetaTrader. If you have a $500 account, what you're going to do is you're going to enter 0.05 on the top of your MetaTrader if you plan on trading that only once. The reason I say that is because don't treat this as what you're entering for every single trade. Treat this, and if you've ever been on my calls before, treat it like a daily budget. This is how you trade safe. This is how I made the most money that I've made in Forex. It was this. Understanding that my allocations were the most important and setting targets. So to give you an example, let's just meet in the middle. Let's meet in the middle and do 0.05. 0.05. Let's pretend like that's what we're doing, okay? 0.05. So there's two things. Allocation. There's two formulas you gotta know. This is such a geek thing to do, but this is gonna help you. Allocation equals account size over 10,000. To find out how many dollars that means, dollars per pip, you're gonna do account size divided by 1,000. Okay. This is the hardest part, but it won't be that difficult, and it's recorded, so you can go back to this and you'll understand it. So we already did the first one, okay? We did the first one. So I have a $500 account. I know that my allocation is 0.05. That's understood. Now we're going to do the same thing. 500 divided by 1,000. It's going to be or 50 cents per pip. Because 500 divided by 1,000 is 0.5. So, what am I making or what am I losing if I have a $500 account and I'm trading at that amount? It's half a dollar a pip, 50 cents. Did I lose anyone with that? These are things, by the way, that you don't have to calculate. Actually, you can. There's a chart. You can search up allocation chart on Google, and you could search up dollar per pip chart on Google, and you could just save that and then print it out if you want, because they'll all be listed, so it's easier. You don't have to calculate it. Okay. Let me see if I can actually find it though. Let's do it. Here we go. Mm. No, I don't think this is it. Is that it? No. There we go. This is it. Okay, I want you to look at something, okay? I'm gonna stop this share. I'm gonna share my other screen so you can see this. Just to make sure it's a lot easier to understand. Because I feel like that's a little bit it's gonna be a little bit tricky if this is your first time looking at it. Okay, here we go. Man, this is gonna be a really good training to look back on. For like a recorder, this is gonna be awesome. Okay, so we're gonna go here. Who can see this? Can everyone see this chart? Yep, okay. This is exactly what I was describing. So go to the bottom. Let's go to micro lot. Forget nano lot. Honestly, that's not. No one really does that. Let's do and most MetaTrader doesn't even allow this, by the way. So a micro lot, $1,000, right? $1,000. The allocation will be 0. Oh wait, this doesn't make sense. This is not what I was looking for. But this is accurate because you have micro lots, standard lots, mini lots. Just understand that with $1,000, you're gonna be trading at 0.1 as your allocation, and it's gonna be 10. Oh, actually not. You know what? This is a bad one. Let's do this one actually. Can y'all see this? Can you see the search right now that I'm looking at? Yep. Okay. Mm-mm-mm. Oh God. It's not a good one. But if I can't find it, what I'm gonna do is I'm actually gonna add this to. I'm gonna find a way to send a good one to all of you, so you can just keep it and save it like that. Because we used to have one, I can't find it, um, and that was really good. It really, 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 really helped a lot of people. So, anyways, let's forget about that for now. What's important is you know the numbers; they're always the same. So when you're trading, you can keep that in mind. But let's go back here. Okay. So now we move on from that. And we have take profit 1 in that trade, which was what, 20 pips? Take profit 2, which was 50. Oh my gosh, my rating. 50. Take profit 3, which was 100, right? Now look what happens here. I know that my dollar value per pip is 50 cents. So if I catch 20 pips on a $500 account and I enter 0.05, this is the math that's happening. I'm making $10, okay, off 20 pips. What you're just doing is timesing it by half. So $25 and $50. So now I can understand how much I'm going to win and lose before even going into the trade. If you know the dollar per pip value, you can find out how much you're going to win and lose in a trade just by looking at the alert. Why is this important? Christian, I literally just copy and paste. Why do I have to overcomplicate it like this? It's because you can't go into investing just by doing that, because you won't know the outcome and you also won't know what mistakes you're making. You have to know what mistakes you're going to potentially make, or what your potential upside is and your potential downside. These are things you have to understand. Um, and this will take you maybe 30 minutes of looking over to really understand it, to maybe to an hour max after this training is over. And that will help you become a significantly better trader, especially in the Forex market. And by the way, this doesn't just apply in the Forex market. You can use this in stocks and also the crypto market. It'll work a bit different because they don't go by pips. But if you understand risk management in one place, it will always carry over to the next. And that's what is the most important, and that's what separates the average retail trader to the ones that become very powerful investors and the people that end up making the most money. So what we did was we broke down an alert to its bones. From this, we figured out step one. We figured out the pips. Then we calculated our allocation. Once we calculated the allocation, we're like, okay, now I know my dollars per pip. Now that I know my dollar per pip, I can actually calculate the dollar amount that I will potentially win. And the stop loss is also 50 pips. So same thing, you could potentially lose $25. This is how much you're going to win for take profit 1. This is how much you're going to win for take profit 2, 3, and this could be your loss. Now that I know that, I can make a better decision into my trade, and I can budget myself the right way. Because if my current budget is 0.05, the most I can split this up is 5 trades of 0.01. If you want to do that. I'm the kind of guy that will trade max twice a day. 2 alerts, maybe 3. So I would never do 5. But what does this tell me? This tells me that the bigger my account size, the more room I have to trade. Let's do one last thing before I end the call. And let's understand the power of compounding. This is a really good lesson for you to learn. How many of you think that making $10 a day is a lot of money? Be honest. Don't just say yes because you feel like that's what you have to say because it's this call. Be honest with me and tell me if you don't think it is. I don't think $10 a day is a lot just on its own. But keep in mind this is a $500 account. This is what happens over time. Month 1, I start off with $500. And my daily target is 20 pips. We know that 20 pips for $500 is $10. So every day I'm looking to make $10. How many trading days are there in a week for Forex? Yep, 5. How many weeks are there in a month? 4. Right? So 4 times 5 is 20. So I got 20 days in the month that I can trade. It actually comes out to a little bit more just because of like hours, but I mean, let's just say 20. And I'm making $10 a day. 20 days times $10 per day is $200. So now I start month 2 with my new balance, which is $700. Now what am I trading at? even if I keep my daily target at 20 pips, now 20 pips isn't $10. Because now my allocation is 0.07, not 0.05, which corresponds to 70 cents per pip. 70 cents per pip times 20 pips is no longer $10. Now it's $14. So now, in month 2, with the same target of 20 pips, which by the way, 20 pips is a joke. I can sneeze out 20 pips. It's nothing. $14. $14 a day for 5 trading days, which is 1 week, and there's 4 weeks. So I know I'm doing 14. Can someone do the math? What's 14 times 20? Is it 280? Yeah? $280. Now I start month 3. With what? Just say it's 980, but you have about $1,000. Now we get to the bigger boss games. Cause now you trade at 0.1, which is it's a mini lot. And once you get to that, now you're making $1 per pip. And now my friends, $1 per pip to earn 20 pips is $20 a day. So in the span of 60 days, you doubled your account. If you told someone they can double their money in 60 days, do you think they would take that? Of course they would. Now is $10 a day a lot? It doesn't seem like a lot, but now you're playing bigger games. Now you have a bigger portfolio. This is compounding. And this is how many people I know, including myself, went from trading and making $5 a day, $10 a day, $20 a day to making $500 a day. $1,000 a day. More than that. It all starts somewhere. It's all a process. This is not get rich quick. It's to build wealth over time, right? Build wealth over time. So I'm going to end off the training on that. I went 2 minutes over what I wanted to do. This is a really long hour. Anyone feel like it was this is like the longest hour that I've ever had in my life. I don't know why it felt so long. But don't you think that if you look back at this training a few times, you'll really nail this down? Don't you feel bad for everyone that missed this now? Because now you know to go back to it, and you're going to become so good at this thing. You're going to make a ton of money, and you're going to see a lot of success. And that's what it's all about. Because look, you want to build your empire, for my business builders in here. You want to build your empire, but now you have, your investments actually working for you. So that's a recipe for success, in my opinion. Then when I go into a trading call, I break it down like this because it starts off really basic, then it gets a little bit more advanced, and I explain simple principles. But if you've ever read The Intelligent Investor or you read Rich Dad Poor Dad, you understand these principles are very important to building wealth. Being wealthy and making a lot of money is not about so much about like the, me going all in and just freaking putting a shit ton of money in and like, whatever. It's about really breaking it down and being strategic with it. Because if you're strategic, you're going to have a lot of money being built over time. And when I didn't have money, I thought it was a lot harder to make money than I realized it is today. So that's it. That's the investing call. I hope y'all getting some value. I appreciate all the thank yous, but just make sure you're applying this. Whatever team you're on, if you're on the GCC Netherlands squad or GCC Arabia squad or GCC North America or wherever else you are, let's keep working. We're almost halfway through the year, so we got a lot of stuff to do. Okay, and then tomorrow, can we get NFT in the chat for tomorrow? Because tomorrow is the big NFT bootcamp. Don't you think if people get a little taste of what we do, they're gonna want to become a part of what we do? So please blast the flyer in your stories. The link is there now. scroll up in GC Champions in the channel, plug these people in, make sure they register in advance, and follow up with them. I will see you tomorrow on that call. Take care. Peace out, GC Champions. Later.